Hey, good morning. Let's go over today's trade plan. So in the overnight session, we got a pullback and a probe below yesterday's low, and we got responsive buyers active at the 87 to 89 support zone, which is basically the balance area low that we're currently working with. And from there, off the non-farm payroll report, so far buyers have been very active, and we've seen a nice buy response from that balance area low from these recent lows over here. So at this point, like I talked about in yesterday's recap video, overall the market is simply stuck in a range, right? So this was the lower end of the range. The upper end of the range now is closer towards '06 and of course the '09 to 11. But overall, we're just kind of balancing within a range, and as soon as it goes up, we see some sellers come in, and on the downside, we've seen buyers be fairly aggressive and fairly active. And overall, bigger picture, if you really zoom out, the buyers have been in control. So at this point, heading into the open, we're going to keep an eye on 98.5 to 2000.5. That's really a key area that will let us know just how strong or weak this market is. If we fail to take out 98.5 to 2000.5, then that would tell you that we could just balance below the initial resistance zone. But if this upside momentum continues and we can take out 98.5 to 2000.5 on the upside, then we can get a move up to '04 to '06. And if the momentum really sustains, then potentially even back up towards that prior VPOC around the '08 to '09 area up here. And then responsive sellers can still be active up at '08 to '09 and even on first test of '04 to '06. But if the momentum is really on the upside, then you want to be cautious on the short side on pops up to '04 '06 and perhaps wait for a short-term exhaustion or short-term extreme that would be up at '08 to '09 before trying to short this market. 98.5 to 2000.5 is a important inflection point, and like I said, this is going to be a very key area off the open, and how the market treats the 98.5 to 2000.5 is going to tell us a lot about where this market could be going. Because if we reject and fail over here, then we could just kind of struggle for a bit, perhaps down towards the 94 level and potentially down towards 89 to 91. And then on the downside, this is a very key level, 89 to 91, essentially the balance area low. And on the downside, if this gets taken out, 89 to 91, that would be a quite a bearish indication, and we could get a continuation move then down to 79.5 to 81.5, where buyers can still be active on first test. The other thing to keep in mind is that the main catalyst today was non-farm payroll, the employment number, and that's already out of the way now, right? So for the remainder of the session, there really isn't any big catalyst that can really drive the market outside of this recent range. So the main idea is that we're just going to continue balancing within this recent range, and that we're not going to put in a big directional break one way or the other. So if we fail at 98.5 to 2000.5, we can come down to 89.91, perhaps find buyers here yet again. And if we break it to the downside, I don't think it's going to be a sustained break. It doesn't mean that we can't probe below 89 to 91. I just don't think it's going to be a big trend down. More likely is that we'll probe down to 86, potentially 79.5 to 81.5 in the event of an extreme downside move, and then we'll just find buyers and start balancing in a range. Same idea on the upside. 98.5, 2000.5. If the market can take this out, then we can head higher, test '04 to '06, potentially up to '08 to '09, and then just kind of start balancing in a range, and perhaps put in a more directional move heading into next week. But on the day session today, with non-farm payroll out of the way, I think that we'll see the relatively high volume that we're seeing in the market right now. We'll probably see it taper off a bit, and it'll be more of a balanced type session, but perhaps with more of an upside tilt, because we have found some pretty decent buyers down here at 89 to 91. So right now, the directional bias is neutral to cautiously bullish, and we're just going to have to see off the open whether this upside momentum can continue. And aside from that, no major econ reports remaining today, so just be careful on continuation setups. I think it's still better in this market to try to get the best trade location, try to be a bit conservative on the entry, upside or downside, try to be a bit more conservative. If you get an upside thrust, perhaps wait for a pullback if you want to get on board instead of just taking it, near the highs, because that could be the end of a short-term move, and then the market starts chopping a bit. So, you do want to time your entries fairly well and, be conservative with your trade management, with your risk management. Volume is running good today, but we do want to wait and see how the momentum situation looks. So keep an eye on the NYSE tick, see whether, we're getting any directional momentum. Yesterday we got a big negative tick reading, minus 1400. And today we retested those lows and held. So a lot of times, that can signal a major swing low. And then if we actually do head back down there, then, it would actually be a bearish indication. But a lot of times, when we get that big exhaustion type sell-off, minus 1400 tick reading within a bullish environment, most of the times that's actually the end of a downside move and not the beginning of a big sell-off. So right now, being in this balanced environment, it makes sense just to be conservative on your entries, be conservative on your risk management, and just play a bit more defense until we get a directional break outside of this range. So those are the main thoughts heading into the open. Let's watch and see if 89 to 91 holds this morning. 98.5 to 2000.5 has already seen some sellers step in, and right now we're kind of just balancing within the overnight range. And so 89 to 91 and 98.5 to 2000.5 are going to be the key zones off the open that we're going to be focusing on. So let's see if the buyers can hold it up, and we'll take it from there.